Okay, everybody, it's me, Gregory Mannarino. It is still Monday, June 6th, 2022. Lovely. What a freaking volatile day in this market. Positive, negative, negative, positive. Okay, whatever. We did finish with gains for the market today. Nothing major, gains nonetheless. However, let us go throw an eye over at the bond market. 10-year yield above 3. The 10-year yield is above 3. Now, this is getting some attention here, even on the mainstream channels. As a matter of fact, if you were to turn on Fox Business, CNBC, Bloomberg, they are, talking about this phenomenon. It's a phenomenon that's occurring right now, in case you don't know. Oh, yeah. Bond yields are rising globally. Imagine my shock. You mean to tell me that central banks are again doing the same things at the same time? You mean they're not rigging the entire financial system globally? How about, oh yeah, they are. But again, look, in my opinion here, and you are clearly entitled to yours, this is expected. I've been explaining to you for months, people, that we are eventually going to settle above 3% with regard to the 10-year yield. We were there already. Let me calm down a moment. We were there already, all right? Then we had the prospect of fear and the narrative of fear with the market, warning after warning from this bank and this freak and that freak, okay? So the market fell under some pressure here. Again, did you really not expect that to happen? We've had a market that has gone virtually straight up for years. Okay, so since January, we've had this rout in the market that's got a lot of people frightened, henceforth why the run into the safety of debt, 10-year yield drops. Now we're seeing that come out, and it's a few reasons behind that here. It's kind of a sigh of relief from the market. Cash is leaving the debt market, looking for somewhere to go. Again, last month, the first positive month for the Dow and the S&P 500 since January. And I think the probability remains very high that we will have another positive month right here. So this rising of the 10-year yield above 3%, I mean, it's astonishing to me. I sit here and I watch this dog shit propaganda ministry channel. Who? Are you watching global bond yield? What's going on here? You make it up. Make any of this stuff up. You can't do it. No one can. It's freaking impossible. But then again, we have a few other things in play. Capital inflows into this market. You got the promise that the Fed's going to continue to raise the federal funds rate here because they want to fight inflation. They're raising the federal funds rate because they really, really are serious. They are really, really serious this time about fighting inflation. Really, honestly. Meanwhile, what are they doing, people? They're being sure to keep the benchmark rate here well below the current rate of inflation. And what does that do? For those of you that are subscribers to my free newsletter, I just wrote a nice piece and I send it out to all of you. Go check it out. But what the Fed is doing by, again, this game that they're playing is assuring more inflation is going to come. A lot more inflation, especially when we're looking at energy, we're looking at food, all of it. Inflation is in no way, shape, or form peaking. And when you hear that narrative being spoken, oh, we're peaking from, I don't know, a Federal Reserve president, the chairman himself. Oh, yeah, Janet Yellen got that wrong too, because it really wasn't transitory and it's longer than that. But she's really sorry. She's really sorry that she got it wrong. It's lied through her teeth, quite obviously. It's not going to stop. When you hear this from, some media outlet, oh, we're peaking, call them up and just laugh into the phone. Just laugh or something into the freaking phone. And then we have this whole thing with, oh, yeah, quantitative tightening. Oh, you know what that means. Look, again, for those of you that subscribe to my newsletter, 100% free, link in the description of this video if you'd like to subscribe. If you don't subscribe, you're missing out on a lot. Anyway, so the theory here behind this quantitative tightening that is going to really fix inflation is, again, the Fed's going to, cut back on asset purchases, maybe even unwind their balance sheet, which is larger than the gross domestic product of most countries in the world on the planet. Okay, it will take decades to do anything with them, and believe me, they're going to create another way to inflate. Oh, really? We already have it. I forgot. We have the crisis to crisis to crisis mechanism. It's already here. Oh, honestly, really? Imagine Greg Mannarino shocked. Can I please see your shocked face? Shocked, stunned. Look, the business of central banks is to continue to inflate, and they will propagate whatever they have to do. Wars, expansion of wars, and whatever else they want to do. This crisis, that crisis, whatever it is, to continue to pull cash into the now from the future in epic sums. You all know this. It's just not going to stop. But again, remember, the biggest clue that you should have. Let me just set the stage here. You ready? The biggest clue that you should have is hearing the dog shit wrapped up in cat shit, sprinkled with bird shit from the mainstream propaganda ministries that are trying to convince you that inflation is peaking. That alone should be the clue, the big tell here that the polar opposite is going to happen. Because I'm here to tell you right here and right now, you ain't seen nothing yet. Another surge of inflation is going to come, and you're going to hear the same narrative. Oh yeah, the Fed's going to get serious this time. This time, the Fed's going to get serious about it. Nonsense. What they're going to do is throw another crisis at you. And you're going to have to fund that too. And you better stand behind it, because if you don't support whatever crisis that they conjure up here, this is no accident. You are not a patriot. You don't care about anybody. You're only all for yourself. So, we gotta give retard presidents, the current one, a blank check to do whatever he wants to do. Oh yeah, how do you feel about that? That's the truth, people. That's where this whole entire freaking freak show is going. So, on the back of the market putting on very small gains today, the 10-year yield getting attention, bond yields rising around the world getting attention. Everyone is so surprised. Natural gas, okay, is just gone crazy. Honestly, it's surging higher here, although crude did fall slightly, even after the announcement by Saudi Arabia that they're going to be raising prices. Oh yeah, how about the billions? Well, let's see. Under President Trump, we sold about $30 billion of weaponry to Saudi Arabia, and guess what Biden is doing? The same thing. Oh, really? You mean they're both doing it? Oh, I thought one guy was a good guy and one was a bad guy. How about they're all freaking effed up? And I think you're aware of that. And I never curse. No, I really don't. Ask anybody who knows me. Greg does not curse. No. So, I don't know if that counts. But anyway, look. So, what else is going on here, people? Gold today, around the flat line. Silver put on a gain. Bitcoin, 31,500-ish, something like that. Okay, you got gold and silver and Bitcoin and the big cryptos here really stuck in a range for quite a while. I don't even know why I keep talking about it. But it's really the truth. I'm just trying to keep you on top of it. You know my take on things. Anyway, you need to have these in your portfolio. You need to understand what you're doing, why you're holding physical gold and silver. If you think even for even a fraction of a nanosecond, whatever that might be, that global debt is not going to balloon from here at its fastest pace ever, well, then you have no idea what's going on. So you absolutely need to be taking advantage of these things. Look, I've been telling all of you for quite a while, you need some exposure here to commodities, ticker PDBC. This has done exceedingly well for us. I IBM, another company. People keep writing to me about oil and gas producers. Should we pull profits from IBM? Greg, should we pull profits from PDBC? Greg, should we pull profits from oil and gas producers? Look, I'm going to say it again. It is never wrong. Never. So don't think you're doing the wrong thing. You can't make a mistake. It's impossible to pull profit. And no one's saying you have to pull it all either. Let's say you have X profit in this particular asset, whatever it might be. You don't have to pull it all. You can pull some of those profit, let the rest of it rise. I mean, you got to understand, again, what you're doing and why you're doing it. So for those of you, again, who continue to write to me about this, don't think you're making an error ever by pulling profit. It can't happen. Okay, but what are you going to do with your cash? You got to reallocate that to something else. That's the only dilemma. Sure, you have, XYZ company and you've done really well, or this ETF or whatever it might be, and then you don't want, the last thing you want to do is be in a dying asset. I'm talking about the US dollar here, or anywhere in the world where you're investing. There's fiat currencies, they're evaporating right before your freaking eyeballs. So, I mean, that should be a no-brainer. Now, I didn't get to put this out in my newsletter, people. In fact, I did it just prior to the market close, but I bought more shares of Goldman Sachs. Okay, yes, the banks have gotten beat up, and yes, I believe there are deals to be made. I think they are massively oversold here in this environment of rising rates. It's not going to stop either. Look, what's happening? You have the most bizarre, twisted environment on the face of the earth. It's designed to do one thing: to destroy who's ever left of the middle class, crush them under the burden of skyrocketing inflation. And as I said, you haven't seen anything yet. Make it harder for these people to do anything here. Raise rates on them so their credit card, it goes higher here, what they owe, adjustable rate mortgages, everything else. I mean, it's all going to go up. It's just a sick thing. And again, do you think this is by accident? Really? Honestly? Was that what you think? I don't believe that you think that. All right, look, so what did I forget? I was writing a few things down here today. I didn't clean my desk, by the way. Remember I said that? I got to clean it. I'm really going to do it after this video blog. Oh, yeah. Let me just bring this to your attention. So we know we have a dirt crisis. You know that, right? Look it up. But there's a soil crisis. There's not enough dirt. Okay. Now we're getting this. This is lovely. This is freaking beautiful, dude. I'm sorry I'm laughing. But now we have the emergence of a new crisis. This is a mental health crisis because people are broke. They have no money. So prior members of the middle class here, like we knew would happen, you and I knew this, we're going to borrow beyond their eyeballs just to try to maintain the illusion of a middle class existence. These people are now suffering some type of mental illness. This is the truth. Look it up for yourself. A mental illness crisis based upon the lack of the ability to make ends meet. It's a new crisis. What else would you expect? And they're going to have to throw money at that too. And every other freaking thing they want to do. Make it up. Make it up. I dare you. Get a piece of paper and make some, you know what you should do? Really? Write down the most bizarre thing that you can possibly conjure up. You can do it now or later. And then compare that to what's actually going on. I don't think, maybe I'm wrong. Some of you probably are that talented, but I don't know. It's way beyond me. People, with that said, I'm going to end this video on this lovely, lovely freaking day. It's always lovely. It really is. And I will see all of you in the morning. Please comment. Let me know what you think about what I covered here. Really. A mental illness crisis due to the lack of money, the lack of funds. What they're doing. What are they doing? They're creating slaves dependent on the system. This is what this is all about. And with regard to central banks and the prospect of surging inflation from here, if you do subscribe to my free newsletter, go check your inbox. If you have yet to subscribe to my free newsletter, please do it. Go read that article. It's a beautiful thing. I think it was, But maybe you think it sucks. Maybe it does suck. To me, it looks good. All right, look, I'm out of here. Love you a lot. See you in the morning.